Of course, the longer it goes, the bigger it gets. Over time, some of the asset's tail risks start to fade away. Yes, it's hard to talk about sharing because you have to separate how much you put into the network from how much you're given. Oh. Hey everyone, and welcome back to this movie of rising insights. Bitcoin and other cryptocurrencies are talked about by Lyn Alden. It is important to remember that Bitcoin is a link in a longer chain. Most people know that they often mistake it for just another financial technology that sits on top of our other financial technologies. But Lyn has been trying to get people to understand that Bitcoin is different from how cash has worked for the past 150 years. This is where people understand that Bitcoin isn't just the result of a long acceptance story. It's a huge change in the way money works that has been going on for decades. Lyn Alden talks about this and other things in the video, so please watch it all, like it, and subscribe to our channel. More people saw and shared it, which means the investment paid off, right? So it's clear that my share grew a lot, but that's mostly because I didn't sell. My share and continued dollar cost average, and I believe you already know it's important to note that Bitcoin is a bigger deal than most people think. They usually think of it as just another money technology that sits on top of our other money technologies. One thing I've been trying to stress is that this is a big change from how money has worked for about 150 years, and I think that's when you understand it's not just a story of adoption over 10 years. The way money works has changed a lot over the past few decades. In other words, I divide money into 3 different time periods. Before telegraph, right? That was the first age. I wrote a lot about this in my book Broken Money. To sum it up, before the telegraph, settlements and deals moved at about the same speed, which was the speed of matter. You couldn't quickly send information over long distances, so middlemen like basic banking services on top of Bitcoin were useful. I mean that these things were important on top of gold-based money transfer services. There were not many brokers in this world though, because there was a transaction layer and the settlement layer. Then, with the invention of the telegraph and continuing up to the present day, information can quickly travel around the world, but settlement still can't. After all, settlement means giving someone worth that can't be taken back, right? So, besides real gold and stuff like delivery in person, you haven't really been able to settle things for money. That meant that for about 150 years since the telegraph became popular, it has only made middlemen bigger and bigger as deals get faster. The telegraph came first, then the phone, and now we have the internet and, of course, mobile internet. All of these things keep getting better. However, there was no physical settlement that could keep up with that, so that job was done by middlemen, who basically kept the ledger centralized. Bitcoin is what finally made fast settlement possible in 2009, closing a speed gap that had been there for 150 years. This means that another layer of centralization has solved almost all of finance's problems, right? Because of this, if I want to send you money, I use a third party, like a bank. If banks want to send money to each other, they connect to a bigger bank. If central banks around the world want to settle value with each other, they stay connected to the largest central bank. This process of centralization fixes all of finance's problems. Bitcoin finally says, here's a fast way to move value around that decentralizes it. It's not just another technology on the transaction layer, it's a technology on the payment layer as well. So you can actually de-abstract and decomplexify a lot of what's going on in money and finance. Even though it's just a technology, it can make a lot of things in finance easier to understand. I thought it was a huge shift in the trend, and it wasn't a story that would last a decade. It looks like it's a story for all generations. It's been decades since the last time a system worth hundreds of trillions of dollars worked the way it does now. That's likely to look different in different places, right? Since not everyone has the same money issues, right? If you live in a wealthy country, you probably don't have a problem paying your bills. When you try to buy coffee, you don't usually run into a lot of problems. And it works pretty well even in many poor countries if you want to send money within the country. It gets interesting when you pay in places like Africa, where there are about 40 different currencies. Just think about all the problems that could happen. Plus, Latin America has about 30 different currencies. Conversion points are a point of tension. Also, if you live in a place where banks can be frozen without a reason or where people are closely watching and controlling your money from a normal point of view, you want to get away from that. So I believe that in some places payments are made earlier because people are having a hard time making payments. On the other hand, if you're in the US, UK, or Europe, you probably run into payment problems less often every day. So I think the fact that it stores value comes first for people in those kinds of places. They see it as an investment. They see it as competing with things like stocks or real estate as a way to protect against currency depreciation over the long term, and it does a pretty good job of that. I believe it's just various issues that need to be addressed. People, and I even like some of the non-monetary use cases that are just around the edges. Bitcoin is simply the most decentralized database that can't be changed. Humanities ever figure out how to build, and some people want to use that to, say, timestamp something in it, which might not be a business use case. On the other hand, they have a problem that they use to solve ours. So I think the ways people adopt will be different. I believe that stores of value usually come before payments, especially in places where people have more money. But those payment problems show up first because WikiLeaks was one of the first places to use Bitcoin. They used it for banking services and to donate money. So the payments part has always been there, but most people in developed countries solve their store of value problem first. If they need to, they may then look into their payments problem on the store of value side. Bitcoin keeps eating away at these other huge assets in terms of market value in dollars. Those together, I mean that the world's wealth, based on different measures, is about that 500 trillion or 1,000 trillion is equal to 4 billion, right? That means Bitcoin is about 1%. It seems like it would eat away at a saves account over time. It starts to eat away at national bonds. It starts to eat away at the things we sell for the lack of good money. And this can be upsetting during the phase when this is happening. If you have money involved in things that Bitcoin is changing, that won't make you feel good. Nation-states will fight back in different ways. They have been doing this in different ways for the past 15 years. It will be a story that goes on and on. In the long run, houses shouldn't be turned into commodities because if they were, rich people would buy more houses because they didn't know what to do with their money. That's bad news for people who want those houses as a utility good. They want the prices to be as low as possible. So there are costs to making money off of utility assets, and Bitcoin can help with that in the long run. But I think that's kind of the point. Even when Bitcoin is 5 times bigger than it is now, it will still be a small amount compared to global assets. Again, I think this is not a 1-year, 3-year, or 5-year story. Not even a 10-year story, it's a story that spans several decades. So when it comes to technologies, people often overestimate how fast they will change things and then underestimate how big the changes will be in the end. I think that's going to be the case with Bitcoin as well. I think people regularly overestimate how fast Bitcoin will completely change the system. To quote or unquote the system, however, I think they don't realize how big of an impact it can have over, say, 30 years or more. It can completely change how we make payments and what we choose to store. It can also have a positive effect on the success rate of our investments. For example, when people don't know what else to do, they invest everywhere, in all kinds of bad investments. Having default really good savings units makes you more careful about what you put your money into. Lyelland says that more money is flowing through the market now and will always be flowing through it. It's funny that even though nominal wages have gone up, real buying power has not kept up with the sharp rise in prices of goods and services that people need. Adding to the problems by letting wage earners keep growing affects everything from comparing the prices of food and homes. To make this conversation more in depth, it's important